My first guest this week joins me via satellite from Houston, Texas. Mr. William Sawyer is the CEO of Lucas Energy on the American Stock Exchange, LEI. Bill, good to talk to you again.
Don, it's great to be with you.
Well, Bill, we're very pleased to be reinitiating coverage of Lucas Energy. For those who might not have seen you before, tell us again what the company does.
Well, our company is very simple. We're in the oil business. We go into old wells, put them back on production, and we look for some underlying value. And when we find the underlying value, we assess whether or not we can do it by ourselves or get a joint venture partner.
Well, it's truly amazing, Bill, when I think of how many wells may have been shut down in the early 90s due to low oil prices and other factors. What does the company look for when you're evaluating a potential property?
Well, as I was mentioned before, we look for some underlying value, but we also look for how easy it is to get into a well and what the prices we have to pay. We always try to stay in front of the market so that we're not paying a high price for an older well.
That's interesting. Now, sometime this month, Lucas Energy, and you announced this in a press release, you expect to see production results from fracture simulation at your Hagen Eagleford well. Any idea what this might mean to the company's overall production?
Oh, yes. Potentially it will double our production this year, and then there's 2 more wells to be drilled later this year, and that might increase it again by double. We're very, very optimistic that it will move forward and it will meet our production goals, and our production will double. And we're looking for really a goal of about 600 barrels a day gross production, which will put us at about 300 barrels per day net.
Once again, we're talking with Lucas Energy. They're listed on the American Stock Exchange. LEI is their symbol. Now, Bill, we're in another one of these periods of time when oil prices are again on the rise and in the news due to events overseas. It's got to be satisfying and comforting to you to be entirely domestic based.
Absolutely, Don. We feel good that we're domestic based. We also feel good that we're onshore only, because being onshore puts us out of the window that's happening right now where the government's wanting to shut off all the offshore properties and not do any new drilling. So we feel that that's good. We also feel good that we are helping America to become as independent as possible right now producing oil.
Well, now, Bill, you mentioned a couple of minutes ago about the possibility of you make decisions whether or not to get into joint venture relationships on particular projects. Can you tell us how those joint venture relationships work?
Yes, a joint venture is really like a tenant in common in a real estate party. That is, you go in, you get an agreement between the parties, and you negotiate the best deal you can. We did a joint venture with Hillcorp, and we negotiated a deal in which they gave us $10 million up front for the right to drill on our property, plus they gave us 15% carried interest in the first 2 wells. That means we wouldn't pay any money at all. And by the way, those first 2 wells have already been drilled, completed, and are producing.
So basically what you're saying is that Lucas Energy, you'll identify and secure the property, and then the joint venture partner will assume the production risk. In some cases, like you mentioned, you'll provide cash to Lucas, and then Lucas will maintain a carried interest in the wells. I mean, is that an accurate statement?
That's accurate. We get a carried interest in the first well or 2 in most joint ventures, and in some joint ventures we get a carried interest in all the wells. It just depends on who we're joint venturing with.
Again, Lucas Energy on the American Stock Exchange, LEI. We're talking with their CEO, Mr. William Sawyer. Now, Bill, is there a lot of competition from other companies seeking to duplicate your business model? Does that make it difficult on your part to find and locate and secure additional properties?
Actually not, because we try to stay ahead of the market and go into areas where there is no competition or very little. The other thing is we're a public company, and as such we have access to better capital. The private companies that are in the same business as we are have very little capital or have had very little capital over time. So we've managed to stay in front of the market, and we've managed to get out and use our advantage as a public company to go after the capital.
Well, now, Bill, we've been covering Lucas Energy now for a couple of years, and during that time we've seen sustained equity growth on the part of the company, and especially this week, I mean, we've seen tremendous growth in the company equity, a lot of activity in your stock price, major volume, price increases. To what do you attribute that to?
Well, the only thing that we know that we can contribute to are, one, we put out a press release this week saying that both of the Eagle Ford wells that drilled by Hillcorp had been completed and are producing. And the second thing might be the oil prices having gone over $100 a barrel. Our posted oil price for this month is $96 a barrel so far, and that's a big, big jump to us compared to last month.
And I think you and I talked about this on the program maybe as recently as a year ago, but I'd like to bring it up again. You know, we're looking at right now, as you mentioned, $100, $102 a barrel right about now for a barrel of oil. Does the company have a per barrel oil price that they know they can be profitable at?
Well, our average per barrel profitability is $28 is our lifting cost. Actually, some of our best wells, we're in the $8 to $10 a barrel lifting cost. So for the better wells, we can go down a lot lower in the price of oil. We made money at $30 a barrel.
So basically, I mean, it's kind of a silly question on my part, but I'll ask it anyway. At $100 per barrel, this obviously, with the costs that you're talking about, this must be a very good time to be in the oil business.
Yes, it is. It's an excellent time to be in the oil business. In fact, we think this is one of the greatest times for two reasons. One, the oil price, but also because we're in the middle of the most active trend in 50 years, the Eagle Ford.
Well, now, Bill, of course, every time a politician gets up on a podium, he or she talks about the need to wean ourselves away from imported oil. You're a domestic energy company. There are those people who think that perhaps we don't have the supply of oil that we need to maintain here in the United States. What's your take on that kind of thinking?
Well, for many years I've heard we only have 30 years of oil left, and then the next 10 years go by and then they say the same thing. I believe that the oil is there. It's a matter of the price. We're now at a price where we can lift more oil and we can afford to go after more oil than we did in the past. Whether we can get completely independent of the foreign oil, I do not know, but I do think that we can make a big pathway moving towards some more independence than we are now.
You know, you're absolutely right, Bill. I remember a college professor had swore to us in a geology class that we were all going to run out of oil by 1990, and I think that was quite some time ago. Now, Bill, why is this a good time right now for folks to take a closer look at Lucas Energy?
Well, it's a good time because we estimate that our asset value is about $5 to $6 a share. And we're selling for today about $3 a share, so we think we're selling below asset value. As a comparison, a couple of years ago we were selling for about 44 cents a share, and our book value was $1.60. So we think we're in the same pathway or the same direction as before. Plus, we think that this new Eagle Ford trend that we're in is going to give us a lot of cash flow, a lot of potential reserves, and future revenues.
Once again, Lucas Energy on the American Stock Exchange, LEI. Bill, of course, as I mentioned, we've reinitiated coverage of the company. Be following you very closely again for the next several months. Looking forward to more updates during that period of time. Appreciate you being back on the program. Good to see you again.
Thank you, Don. It's good to be on your show.